Good evening, all. Ira Epstein, and here we are with your financial market wrap-up. And this wrap-up is for the evening of Monday, the 6th of October, about 6:55 p.m. Central Time. Well, a little bit of a correction hitting the stock market. You know, it's a fleeting moment because this market refuses to stay down. So do I expect buying by the pros tonight? Yeah, probably. Until it stops, it doesn't stop. Gold, new all-time high, $1 away from the 4,000 mark in the December futures. Wow. Dollar index was sharply higher today. It sold off nearly 30 points at the end of the day, actually almost 40 points. So that was quite a drop back. I'm watching what the different currencies are doing. The dollar still has been getting stronger via interest rates as well. But it's interesting because people keep using the word debasement, where they're saying, oh, there's buying going on in Bitcoin as it's up now to $126,000 an ounce. That's pretty big. And the gold at 4,000. So people are moving away from the U.S. dollar. Seems to be the talk of the day. OPEC over the weekend, what they ended up doing is they ended up giving more oil production to the market, 137,000 barrels a day. But that's not the 500,000 or the 300,000 that the market had thought might happen instead of that number. That was the lowest guess. So that was friendly, and the markets gave you an interim rally. The question is, can that rally hold? So we'll see. In the grain markets, tomorrow be very careful. The USDA is supposed to announce a program to help the farmers. I know it'll cover beans. I don't know what other grains it might cover. I don't know how the money has gotten to gets to the farmer. I don't know the particulars. Nobody does yet. So you want to watch that. We'll see just how that plays out. In terms of news of the day, you're going to get Redbook sales at 7:55. You're going to get the Atlanta Fed President Bostic. He's going to speak to the National Chamber of Commerce at 9 o'clock. The Federal Reserve at 2 o'clock is going to issue U.S. consumer credit data, and the API numbers will come out at 3:30. So at least we're going to get some data here to work with. We haven't had that, and that's made the markets very difficult to look at. So let me get you back to the charts if I could. Here we are. And let's take a look at what we have. In the S&Ps, you're at an all-time high. It's phenomenal. On a closing basis, this market's already up 0.25% for the week. It has come up, and the ranges are narrowing, but as you go higher, eventually corrections set in. People go, they don't, blah, blah. They do. You've had them here. You just had one here. I expect you're going to get another one, but each one is proven to be in buying opportunity. You still have the pattern of higher lows, higher highs when you put the swing line study on. What else do you have? You're over the 18-day average of closes, so a logical buying area seems to me to be around that 67.16 level. If you take a look at the Bollinger Band, the market keeps going up to it and stalling. It ran it here, which is very different. Here it just spent a few days at it, and here before correction set in. So the question is, after this longer run that we had right here, is that enough for it to set back a little bit and let traders in the market? In terms of the slow stochastics, you had lost the embedded reading, you had your correction, and the market rallied again. Now it's embedded. So until that red line closes underneath 79 on a closing basis, I contend the traders will try to buy the market. When we look at the Nasdaq, today you got up to the upper Bollinger Band, you're embedded. I think traders took some money off the table. If you don't take out today's high tomorrow and you break nicely, I think they'll buy it back. When we take a look at the Dow Jones, no embedded reading, just an overbought market. Overbought market means that either the red or the blue number, they're called the K and the D, either one over 70 is overbought. Embedded means both numbers have been running, minimum of 3 trading sessions in a row over 80. You don't have that here. So I see the profit taking hitting the market. That doesn't mean that the market can't pull back to the 46,578 level and find support against that 18-day average of closes in red. And the same could be true of the Russell. It's overbought. I'm looking for support back here. But when you're overbought, this market will take a lot to get it away from there because you have a 77 reading. So it's not my favorite one. I think the Dow might be more interesting. In the DAX, we ran last week over the upper Bollinger Band, and I left you on Thursday saying don't be surprised if you get a pullback, and now you spend Friday and today getting your pullback. The market is trying to embed and go even higher as money moves out of America and moves into other areas. In the 10-year notes, you have actually failed at the 18-day average, rallied all the way up there in the past Thursday and Friday, and now you've spent fighting there, and the market gave up on that. So real yields go up when this market drops. That's not what people thought would happen. They're still saying the Fed is going to cut come the end of the month when the next Fed meeting is. The probabilities on the CME Fed Watch page are very strong that that is going to be the case. And the more I read Moody's and the others, they all say that the economy, if you had the numbers, you'd see that the jobs market is weakening. I'll go with that. So we'll see what happens. But these pullbacks, now what you want to look at, next time you get up and over the last rally high of last week, that's where the market gets interesting. In the dollar index, what do you do the first time you hit a Bollinger Band? You know what I tell you? The first time you hit it, money's coming off the table. And that's what happened. You fell 40 points from that today. In the eurocurrency, you went down to the 100-day average in the Bollinger Band. Short covering hit the market. That's just what I teach in my charting courses. And in the Aussie dollar, that's one of them I'm watching now. If this market can clear this high of last week, watch out. You can get a pop in the market that you're not ready for. What I don't want to see is the current lows taken out from last week either. So I think last week's range is very important. In Bitcoin, up to new highs. It got over the Bollinger Band for 2 times, and now it's trying to pull back in. It is overbought, not embedded. I'd use caution. In the Brent crude, last night I told my clients, expect a rally. It's what I'd call a bear market rally, not the turn of a trend. And so far, that's what I'm seeing in the Brent. WTI, I'm seeing the same, a lot of resistance up here. Too oversold for me to tell clients, at least mine, to deploy new money on the short side. Heating oil, into too much support here to do anything. You've got support at the 200-day average, the Bollinger Band, and the 100-day, and you're oversold. I am not telling you I'm picking a bottom. That's not what I'm saying at all. What I'm saying is that's the ideal spot for the shorts to be covering. In the natural gas, still in an uptrend. Higher lows, higher highs in the market. You need to take out today's low and close under the 18-day average to give it a warning sign that it's anything other than a rally that has begun with an attempt at an uptrend. And that's what it's trying to do. So you put it all together, you come up with game plans, and that's exactly what we try to do for you. Remember, one of the ways that I do that, when you're looking at these markets, and I'm showing you all the different charts and all that we have, we should come back to those, in fact. Let me see if I can get it to come back. Probably can't. Here we come. There we go. One of the things you do is you go to our website, iraepstein.com. You'll see the videos on the front page. And, of course, another way to catch up with everything I do is some of the free offers. And the best way is my morning videos and my written updates. Those are for paid subscribers only. And I think you'll find them pretty interesting. I'm Ira. You have yourself a great evening. I'll catch up with you tomorrow.